We're glad that you've joined us for the Market Day Report here today. I'm John Jenkinson, and let's go straight to the corn board on all the grain boards and find out where we stand post-report. It's September corn down 7 3/4 at 361.5. The new crop December corn down 7.5 at 375 1/4. September soybeans down 35 3/4 at 857 1/4. November down 36 at 868. That is a penny off of the low, however. Over in the wheat market, it's the September down 7 3/4 for Chicago wheat, 556 3/4. Kansas City wheat for September down 8.5 at 570. In the Minneapolis wheat market, the September contract down 13 at 616 3/4. Again, off of the low, but way under the high of 633. And December cotton down 113 at 86.13. For analysis, let's travel to Chicago. At the edge of the trading floor at the CME Group, Scott Gecas, Longleaf Trading, joins us. Scott, the market has kind of had a chance now to look over all these numbers. We're about 45 minutes after the release of the report. What are you hearing on the floor? What are your thoughts?
Yeah, I mean, today, this is the reason why people come to the floor. I mean, it's rocking and rolling. We haven't seen this much activity in quite some time. Huge selling, huge volume, big spike in option volatility. We're going to actually see where this is going to play out within the next hour or so. I expect the volatility to come in a little bit, but also we're going to see how if we get any more follow through to the downside on all the grains just across the board.
I'm glad that you bring up that follow through because you look at these charts. Boy, this really took soybeans in particular for a big setback here.
Yeah, and it's all coming out to the yield. You know, the yield on the high end was expected about 52. It came in right underneath that high end of the yield. So the world ending stocks are going to be roughly around record highs. All that is spelling a little bit of trouble for soybeans. One thing I wanted to point out is you have two issues with the soybean in particular that sparked my interest. One was the Europeans, they bought 476,000 tons last week. That's the highest weekly purchase since 2003. But on the other hand, you have China canceling 13 out of 17 weeks of old crop shipments. So those are offsetting each other, but either way, we're going to see how this is going to play out at the end of the day.
All right. When you looked at this report, you mentioned that yield number was very interesting to you. What about these? What about these ending stocks numbers? How much of is the trade paying attention to these, or are they putting more stock in that yield number?
I think they're putting in more stock into the yield number as well as the ending stocks. The ending stocks being at record highs is very significant, and that's one of the reasons why you see a big flush in the market today.
Is there anybody in the trade today talking about, well, if we would get some kind of trade agreements that maybe some of this bearish news could be removed eventually off of this grain market?
Oh, for sure. You know, that's the one thing that I've been talking about for the last few months is just, you know, you have Trump risk, headline risk. If anything positive comes out of NAFTA, which there is a rumor that Mexico is going to work something out with NAFTA very soon, you're going to see a huge spike in all the grains, all the meat complex, just across the board.
Scott Gecas with Longleaf Trading here on the online with us here. And Scott, hang around here for just a moment. When we come back, we'll be talking about the livestock trade, what's going on over there. We'll do that right after this here on the Market Day Report. And now it's time to find out where the livestock trade is headed on this Friday. We'll go to the live cattle board. This is a market that was under pressure from the get-go first thing this morning, and now a little bit of a surprise here in the October live cattle, up 3, 109.08. The December down 13 at 112.85. In February, down 42 at 116.08. So that October kind of going the opposite direction, the rest of those contracts. August feeder cattle are up 57 at this time for 149.92. September up 6 at 149.08. October down 12 at 149.08. And November at 149.50, down 25. Cash cattle trade is still very, very quiet in the south. And we did see some of that trade happen in the north, 175 to 179 on the dressed basis. That'd be steady to $1 lower. But the south, we've still got asking prices at 115 Packers are bidding 110, so we're still $5 apart here. As far as the hogs go, let's go to the futures here and find out. August down 13.5485 after a high of 55.62. October down 40 at 51 even, and December down 32 at $47 a hundredweight even. This is a market that started the day out higher after yesterday's big rally, and these front three contracts are operating in expanded limits here. The potential for expanded limits, I should say, after yesterday closing limit higher. Let's find out where the cutouts are here at midday, because this is information that was out just a little bit ago. It's kind of overshadowed by that world supply and demand estimate. Choice up 24 at 206.30. The selects up 28 cents at 198.37 a hundredweight. For the pork cutouts, they were higher, with the loins up 157 at 75.25. The hams up 202. The bellies up just 7 cents, but at 96.79. The carcasses were down 38 cents. Let's go back to the edge of the trading floor. Scott Gecas is here with us. What about this livestock trade today? Seems to be a little bit quiet, and hogs now starting to leak to the lower side.
Yeah, just the protein complex across the board is running into huge supply concerns. A strong liquidation yesterday, a little bit in the cattle market. You have that drought in Australia that's going to increase a little bit more demand. Slaughter rate keeps continuing to rise week on week versus year on year. You're running into a weird dynamic with the fourth quarter production. It's actually up when it usually comes down. The weights are increased a little bit or holding steady when they're typically usually dropping off. So those are big concerns. 110 has always been a key level in the cattle market. We're definitely keeping an eye on that. We're going to see where that ends up. And the hogs, huge supply concerns. We need positive news with exports. There's a rumor that Mexico is going to take away that 20% tariff tax, as well as have a deal done with NAFTA. If that does come out even a little bit today or anything, you're going to see a huge spike. I wouldn't be surprised if you see the hogs go limit up and stay limit up for a few days if that comes out.
Well, we had that limit up yesterday, but we sure didn't have much follow through today. Now that we see the market starting to weaken here just a little bit, why is it? Is it just the thought that maybe yesterday was overdone?
Yeah, it's the thought that yesterday was overdone. The export numbers are not hitting where they should be. The lack of news out of NAFTA, lack of news out of Mexico in particular, I mean, that's what's driving the market a little bit lower.
Scott Gecas, Longleaf Trading, here with us. Scott, always good to have you on. Thank you very much. One of the things that also factors into exports, of course,